Good morning. Stocks are pointing to a lower open on markets for Tuesday amid concerns the Federal Reserve could scale back its stimulus program as early as this month. Looking at today's headlines, the economic calendar is light today with U.S. motor vehicle sales the main agenda item. So far, Chrysler has reported vehicle sales rose 16% versus the 11% estimate. Ford is down slightly ahead of its news, while GM is up. Apple acquired social analytic firm Topsy for $200 million. Topsy analyzes all the output from Twitter. And speaking of Twitter, the quiet period is over, and the banks that underwrote the company for the IPO can now express their opinions on the company, and it's decidedly cold. One analyst said it's overpriced, and he suggested selling it. As I mentioned earlier, stocks are down on concerns that once again are rising. The Federal Reserve will scale back its bond buying. However, the Fed will be in the market at 11 a.m. today, buying $900 million in the 10 to 20 year sector, and then again at 2 p.m. buying about $3.6 billion in the 5 to 7 year sector. Banks have already started dumping bonds, trimming holdings of U.S. government debt for the first time in 6 years. Citigroup cut its Treasury holding 10% this year to $82.6 billion, and Bank of America, they cut by 88% to just $2.97 billion. This is the lowest amount of government debt the banks have owned since the Fed began compiling the data in 1973. The banks are only trying to get ahead of the game. A JP Morgan analyst said the technical setup favors a bearish break from the current 2.65 to 2.85 10-year note range to 3.01 to 3.15%. Now, when the yields go up, that means the price comes down. And so, just like the love for bonds has cooled, so has the love of donuts, and in particular, Krispy Kreme. Brittany Umar is here to tell us more about their earnings.
Yes, well, investors were clearly hungry for better results from Krispy Kreme. The company said its fiscal third quarter profit grew 34%, but it wasn't enough to satiate investors who zeroed in on the company's disappointing guidance. Revenue slightly fell short of estimates, though adjusted earnings of 16 cents a share beat by a penny. Krispy Kreme said higher same-store sales and growth at U.S. locations helped boost profit. But looking ahead, the company said it sees preliminary earnings for fiscal 2015 between 71 cents and 76 cents a share, below a 77-cent consensus estimate. Now, CEO James Morgan said they're pleased to have increased their top line at a, quote, healthy pace despite the tepid consumer spending environment, although investors clearly are not pleased. At last check, shares of Krispy Kreme were falling more than 16% to $20.61. So not a sweet morning for them, Deb.
No, it isn't, and I love Krispy Kreme, so I guess you and I need to go and help them out and go buy some donuts, right?
Yes.
Well, I guess it is all about the coffee. You know what? That's about it for Wall and Broad. Good luck trading, everyone.